Hi, everybody. This is Trading Bitcoin. Very good World Cup. So it was impressive on Croatia. Impressive game, guys. So at least I'll say that. Yes, I did want Croatia to win, but it was a fantastic game. Wimbledon. So fun Sunday. And now you guys get Bitcoin trading and some traditional markets. So maybe it doesn't get better than that. So, Tone, you're having some fun these
Yes,
days. What?
yes, it was a good World Cup. I was watching it in the car while driving from Lake George over to the woods, where it's time to actually have a drink. Again, as you guys know, I drink tequila. I actually have never heard of this tequila, but hey,
Is
I'll
that
take.
Doritos?
Yeah,
Oh, God.
like, is it bad?
Let's see you take a shot and see how the look on your face. Lime shot too. Wow.
Apparently, yeah. Well,
Mm.
it's hey, whatever I happen to have out here.
That's how broke you got? Just
Apparently,
kidding.
yeah. I have to I have to make sure everyone knows I'm broke before I get sued for libel or something.
Well, okay. We also have Ned Stark on the show. Ty?
Hey everybody, how are you doing? I'm just working, putting some charts together, but I will pop in just a second. I think this will be a lot of fun if Tone isn't carried out in chains.
It looks
Yeah,
like they may not be able to find him though.
yeah. I think you were right, Leah. I need to next time. I'll bring my Hiradara Selection Suprema from the house.
Let's see it. Let's see it. Take a sip.
Hmm.
Yum.
No, I already did. This is not ideal.
All right. Well, get your mugshot off. Let's see some trading Bitcoin.
All right, let's
Also, very impressive, guy. If you saw this yesterday, Tone had an umbrella and actually made it happen in the rain. It dedication, dedication.
Yeah, no, the rain came out of nowhere. It was like too sunny when I started, and then it started pouring like 40 minutes in.
All right. I have a lot of questions from you already coming in the live chat. So
Oh yeah, yeah, yeah.
before
All
I
right,
get
yeah,
inundated,
yeah, yeah. Keep that covered. All right, screen share. Here we go. Oh wow, this like I don't know why I'm getting like bit up by like random things I've never seen before around here. This is not ideal. Um, okay. Screen share. Let me move the stuff out of the way. Uh, wait, give me a second. Okay. Here we go. So tonebase.com, please check that out. If you like these podcasts, please support by going to the affiliate page. The workshops are still a go. Looks like some people are signing up. Boston, then Vegas, then Chicago, and then I will not be anywhere in North America until January. Okay, I'm out. I'm out of North America between September 1 and Christmas. So keep that in mind. Okay, charts. Monthly chart, we looked at it last time a little bit. Let's back up. Based on monthly charts, where are we? Well, we're even on a monthly chart, we never really had a big rebound. If you look back at 2014, you had 1, 2, 3, 4, 5 candles of downside. The fifth month of downside had a beautiful reversal candle that gave you 2 positive months in a row. The current monthly pattern is very different. You had one, and then on your second month, you had a reversal month. Now, here is the problem. The second candle of a downtrend is not really something to cling to. And as you can see, we never went above the high of the reversal candle. So the reversal candle, this dragonfly doji-ish candle, so this candle, it is a reversal candle, but you never traded above the candle. You really needed to go up above, let's say, 12,500 to get above this Fibonacci line in order to consider this a reversal candle. And even if you did, I would question it because it's only like the second candle of a reversal, right? this you had straight one. Yeah, there was a green month, but it was small. But you had 1, 2, 3, 4, clearly a trend to the downside. This trend went from about 1200 to a low of 350. So 1200 to 350, that's about 70% down, like 72% down, let's say, right? Here, you went from 20,000 down to 6, which is also about 70% down. So you fell much faster, but you never really reversed. Now you are pushing it, but you don't have a reversal candle. You don't have a reverse monthly candle. Like if this candle ends as this kind of doji-ish candle, it could be a reversal candle, but don't assume that it will be. So I still think that we're on pace for 5,000, and this monthly chart is showing me that. I haven't really seen anything to tell me otherwise. And Tyler, feel free to jump in any minute.
Okay. Yeah, we talked about that monthly before, and I think that's very, very significant, what Tone just pointed out. That basically means we got 3 more months of this kind of action. It doesn't mean that all 3 months are going to be negative, but they could be. There's nothing on this chart to indicate any optimism for the price of Bitcoin.
Yep. Oh, by the way, Leah, Ty, remind me if you guys want to start the discussion of the Bitcoin ETF that may or may not be approved. I should say that, SEC is supposed to say something on August 10th. Now, I don't know. I think talking about it now is a little too early to speculate on not only what they might say, but also what might be the outcome of Bitcoin price based on what they say. So we do have to do a show on this specifically, but we would also just need to discuss in general, hey, what do we think the SEC is going to say? And if they say what we expect, what are we expecting from the price? And also, if they say the opposite of what we expect, what do we think is going to happen to the price? People seem to always think one or the other, right? Like Ethereum is unlicensed or registered security. The SEC has not yet agreed with me on that. That's fine. But the outcome of the price is independent of whether the SEC is or isn't doing their job.
Yeah, that's a very good point, and it is too early to talk about it, but we will talk about it briefly today because we're going to continue looking at the letter G. Everybody's saying I sound like Mr. Rogers, but the letter G also includes, and we'll do some charts on GBTC, even though it's the Bitcoin Investment Trust, the ticker starts with the letter G. And I want to make some comments about the possibility of a new ETF coming out and what I believe it will do to GBTC. We'll do that a little later in the show.
So here's the weekly chart. I would love to, tomorrow's show is going to be a lot more interesting than today because we will have one more piece of data of the 30-week moving average. Now, the 7-week moving average is not going to change. The 50-week moving average is not going to change, but the 30-week moving average is really, really moving. And I want to see what it looks like in about 5 hours, basically. So keep an eye on that. As you can see, we broke out of the triangle to the downside, pulled back into the triangle to back test it. And now we're starting to go down. Now this candle looks like it has a nice wick along the bottom. Again, nothing to write home about from a bullish perspective. I don't think it's ready yet. I still think there's plenty of downside. Now, okay, I need to clarify something up. So in our last video, I don't even have my indicator on this Litecoin chart. Let me add it. I should probably add the moving averages too, the proper ones. My scripts, actually, no, it's not in my scripts. Boom, boom. Let's close this. Let's close this. Okay, I have my script. I need to get rid of those numbers. Okay. Oh, Litecoin's on a 9 as well. And oh, I thought I added the moving averages. Triple moving average. 30, 50. Okay, close that. Orange, purple, blue, and make them thicker. Okay, so, oh, this is actually kind of interesting. So, yeah, so the charts look very similar. So I want to make something clear. For some reason, when I talked about the Litecoin's formation, I'm not saying that Litecoin somehow predicts the price of Bitcoin. I'm not saying that at all. The future of Litecoin is zero. The future of Bitcoin, I believe, is over $1 million a Bitcoin. So don't start like confusing. Tone is using Litecoin to predict the price of Bitcoin. The purpose of showing you Litecoin is that Litecoin is behaving more properly from a technological perspective of breaking down from the triangle. So that was the purpose of this tweet, okay? Leah has Thor with her.
Hey, Thor.
Want to say something? You can put you on the big screen. Nope, you're still muted. He walked away. All right, never mind. I was using this to show you Litecoin is just behaving much, much cleaner from a trading perspective. Like as a trader, this was a beautiful low risk short right here on a breakdown candle out of the triangle. And then it went from $114, down into the 70s pretty damn quickly. That's a pretty clean move. And now it's making a 9, and this 9 is a lot, cleaner, and you can still take most of your profits from that trade. I'm just saying from a trading perspective, Litecoin was the cleaner short than Bitcoin, just as a trader versus the dollar. Okay, if you can short LTC versus the dollar. So that was the point of this. And this is how things usually behave. Now, Litecoin is also very convenient in that, why is that line all the way up there? That's weird. Where's the rest of my data? There must have been some data here. Why did it? I'm not sure what happened there. When I was drawing this line, there must have been data up there.
Yeah, there was. You did it yesterday.
Right. So what happened to the data?
I don't know. Maybe switch it to a monthly or a daily and see if it picks it up.
That's weird, right?
Yeah, it is.
Yeah, I don't know what happened.
Hacked.
Yeah, that line was drawn off of an old peak.
Right. Yeah, I don't know what's going on there, guys, but there was a peak in data here, so I have no idea what happened. My Bitfinex screwed up from yesterday. Who knows? Go to yesterday's video. So anyway, so it just behaves in a cleaner way for a cleaner trade. That's all. And Bitcoin will probably do the same. Also notice how fast the 30-week moving average is dropping. And I think next week, we're going to take out like another one of these highs. So it's going to be interesting. So it's going to drop fast as well. They're just behaving very similarly.
So you'd expect a 1 to 4 candle upswing from here?
No, you see, this is where it gets tricky, right? Because we're already on a third week of a neutral market, right? So again, it's more kind of like the spirit of the whole situation. The countdown itself started with this candle, but you can see how the drop began one candle earlier. That was still a green 3 candle, right? So you can always move your you can almost move your 9 one candle to the left, right? And the low came in one candle before that. So I would not assume a 1 to 4 candle correction off of this particular 9, which isn't even perfected, right? I usually expect 1 to 4 candle corrections when you have a 9 that's, you know, kind of like actually happening at the lows. But this 9 isn't happening at the lows. This 9 honestly should have been one candle earlier, and the low came in one candle before that. So it's very possible that this will not even have a 1 to 4 candle correction. It's pretty much done.
What about the idea that now that it's broken down sharply out of the triangle, that it makes an attempt to retest the break?
I think again, that's probably what I would have said at the end of the day yesterday, or in the middle of the day yesterday, when we were trading above the high of the reversal candle that has a 7 on it. But this candle pulled all the way back with a wick larger than the body. That means there was more selling than buying, which means this volume should really be a red bar, not a green bar. And you can see the current candle traded well below that candle, and the price currently is still below the prior body. So to me, it doesn't have any more signs of bouncing back to the bottom of the triangle. It's, you know, building a base in the 70s to be broken to the downside.
Got it.
So that's my view on Litecoin. Here is the daily chart of Bitcoin. It's still on a red count, but unless we fall heavily tomorrow, the red count is going to break, which continues to frustrate, you know, people that trade this indicator on a daily chart. We have not had any red 9s at all on this entire downtrend. They keep making it to 7s and 8s, and then they kind of snap. So that's okay. I mean, trading isn't easy. If it was easy, everybody would be a billionaire. So you have the price is near the vicinity of the lows. All your moving average are trending down. All the moving averages are lower than the moving average slightly above it, like term-wise. I mean, this is a complete bear market. We now had 1, 2, 3, 4, 5 days in a row where the beginning and ending of that day was lower than any other candle in all of 2018 in the first, you know, quarter of the year, right? The first 3-4 months of the year, right? Like, you are spending an unreasonable amount of time below the 2 prior lows. This is not how bottoms are made. I don't understand how people continue to think that if 6,000 only holds long enough that we're going to start going to the upside. If this was 600, I would agree with you, but it's not 600. It's 6,000, okay? There is still plenty of room to go down, and technical analysis says that it will. The 12-hour chart has always been a lot cleaner. You can see how we bounced right off this 9. Again, it's an unperfected 9. And I honestly wouldn't have expected this for the same reason I just said in Litecoin. You know, usually when you have this kind of a bottoming out process, it tends to just consolidate and go down. But the last 24 hours has been, you know, a little bit good to Bitcoin. So, but hey, look at the arrows that I drew. I anticipated us to resume the downtrend on Monday, even though I expected it from a, you know, 6150 area. We're now, you know, closer to 6350, not 6150, $200 higher. But I'm anticipating the reoccurrence of the bear trend any day now. Okay, I still don't have my 4-hour chart. I don't know what happened to it. I'll need to go and look for that. The hourly chart isn't telling me anything. What is this? Wheat. We took a little bit of a look at wheat. I'm not going to do it now. We took a look at the S&P yesterday. Please take a look at yesterday's video. I think the S&P is ready to go to new all-time highs. The NASDAQ, I'm sure, looks even better. I think gold should start trading while we're on this video. I think gold starts trading around 6 p.m. today, 5 or 6 p.m. So either gold starts trading in 30 minutes or in an hour and a half. I think gold is ready to collapse. Ironically, you see the current price of gold, $1,241. That was the exact price of gold in November of 2013, when the price of Bitcoin traded $1 above the price of 1 ounce of gold at 1,242, and that was the all-time high of Bitcoin until 2017. It was a really cool day. You guys should Google it. I remember that day. It was so much fun. All right. I think, Tyler, I'm going to give it off to you here.
Okay.
Gentlemen.
With Google. Yeah, unless Lee has a couple of questions for us.
Yeah, let's go back to Bitcoin before we go to traditional markets. That work for you?
Yep. What do you got?
So, first of all, someone was asking, is there an inverted head and shoulders forming on the daily chart?
No, and I don't even have to look at the daily chart.
Great. Okay.
Well, actually, okay. No. I'm wrong. The real answer is maybe. If the price of Bitcoin goes back to 6,800, then you can claim head and shoulders. So until the price of Bitcoin gets to 6,800, it's possible. So yes, left shoulder, head, right shoulder, if and only if we make it back to at least 6,750.
Is there a death cross coming in the weekly?
Yes, absolutely.
In fact, there's no way to stop it.
Yeah, I mean, unless Bitcoin goes to 20,000, like in the next 2 weeks, it's going to happen.
Tyler, were you saying something?
Yeah, I was just saying that there's no way to stop it now that it's turned the corner and accelerating, because the intermediate term, the blue line there, which is the 30, is moving up. And
no, this is the 50, Tyler.
Oh, the 50, I'm sorry, the 50 moving up and the 30 is coming down sharply. Therefore, the 50 cannot turn down and the 30 is not going to turn up. Therefore, they're going to cross. The only question is when and where, how much time it's going to take, but somewhere towards, right around the vertex of that triangle, I would guess.
Oh, this is Litecoin. Sorry. It's even closer.
Yeah.
It's even worse on Bitcoin. I think they'll cross in 3 weeks.
Yeah, 3 to 4 weeks, very probably. We can figure it exactly by which candles are coming out, but
right. So we need next week we're gonna take out this red candle. Once we take out this, and this, that's it. Once we take out these 3 candles, the week of the last 3 candles in December. Once we knock this out, this is the last high. Tomorrow we're gonna knock out this candle. We're gonna remove 15,000. The candle after that we're gonna remove 14,000. But it's the candle after that, the 16,000 is the last highest high in the calculation. So in 3 weeks, this thing is crossing. So it's and tomorrow you will see it even lower, and then 2 more weeks it'll cross.
And basically that's true if the price goes sideways. If it goes down from here, the angle that the intermediate term crosses the long term will become very difficult to turn around if prices begin down, as it looks like they're on the verge of doing. So when you go back into history and you see...
Once again, I want to remind people what happened the last time they crossed. The price of Bitcoin fell they crossed at about $500, and the price of Bitcoin bottomed at 150.
And when did they recross? How long was it between the crosses?
It was, they crossed in August, which is what's going to happen again. They're going to cross in August again. Maybe in July, but probably in August. So they're going to cross in the same month. They crossed back over in November of the following year.
Yeah. So
year and a half.
That's one of the things that Tone and I have been trying to talk about is it's not only the price target, and the price target to me is very clear, at least down to the 5,000, 5,200 area. And I give it a 1 in 4 chance of holding there. And then much lower prices if it doesn't hold. But that could happen very quickly. What won't happen very quickly is the turnaround. And you can go sideways to down for a very long period. In the case of 2014, it was more than a year after the cross, and we have not had the cross yet. As Tone is saying, probably in 3 weeks or so, 4 weeks, somewhere in there. And then the clock begins, and it takes an awful lot of power in the form of price activity to turn those moving averages around.
Right. And one final thought, just keep in mind, when they crossed last time, the price of Bitcoin was a lot closer to the cross, and the price of Bitcoin was above the prior lows of April. And that's why the current situation is different. In the current situation, the price of Bitcoin is a lot further away from the cross, and we are below the lows in April, okay? So if the price was closer to the cross, it would be a no-brainer short trade. But because the price is so far away from the cross, it's possible that the price will have a dead cat bounce into the cross. So this makes it a more difficult trade than it was back then.
Is there a significance of a death cross that's produced by an extreme price movement?
It makes it harder to trade.
Tyler?
By definition, you can't get across without extreme price action, both up and down, but I know what you're saying. And I would agree with Tone. It just clouds the water in terms of what do you do if you're in trying to look for a place to get out. You hope that in this case, when they cross, you're going to get a reaction back up towards the cross. But if that gift is given to anybody that is still in and wants out, I would take it, and I would take it willingly and quickly rather than fighting it, hoping that we're going to go up. Once that cross takes place, that's the stamp of approval of nature and maybe a lot of other things, all the way up to the metaphysical level, that this particular thing is in deep, deep trouble.
Just one more look at the RSI.
Can you guys hear me? My internet wasn't the best.
Yep.
Ready for another?
Yep, fine.
Yep, do it.
Cool. Alessio Restrani said in a recent tweet that he believes there's going to be a big move likely this week based on time analysis cluster forming. What are your thoughts on that?
I haven't done any time analysis lately. The only time analysis I've been doing is obviously the sequential system. I haven't done the Martin Armstrong style cyclical time analysis in a long time. Maybe I'll try and find some time next week and do it. So no comment.
Ty?
Yeah, I've been following Haijin Lee's cyclical work on S&P 500 over the last 3 weeks. He's done a lot of work on the various cycles in the S&P and has come to the conclusion that we are on the verge of a very big move up. Now, Tone agrees with that. I agree with that with a little bit more evidence. And cycles can be a great way of finding major bottoms and tops, not very precisely, but in terms of weeks or months, you can begin looking for bottoms or tops. And according to his work, we are bottoming out in the S&P with this 6-month sideways correction that we've been in. So we'll just have to watch it.
Hey, so someone, sorry, Leah, go ahead.
Well, okay. Go for it, Tone.
No, I was just gonna say someone like asked me to look at yearly charts. I don't know why. Here's a look at yearly charts. If you assume Bitcoin had a price in 2010, you just shift all of these numbers off by 1, and this is currently a 6. So we should have at least 3 more years of upside.
You just wanted to do some optimism there. I like it. Okay, Ty, it's a question for you. This is for Bitcoin. So if you use longer, it's a question. If you use longer term moving averages on smaller time frames do you use longer term moving averages on smaller time frames in Consensio, example, the 50, 128, 200 moving averages on the 4-hour chart? And if so, currently all the moving averages are squeezing together. What are your thoughts on that?
What I like to do is I like to keep the same basic moving averages in terms of their separation from each other, regardless of the time frame. So what I mean by that is I like to use a 2, 7, and 30 on a weekly basis. But that means on a daily basis, I like to use a 2-day, a 7-day, and a 30. And on a 4-hour basis, I like to use it 2 4-hour, 7 4-hour, and 34-hour. But I hear what you're saying. The longer price goes sideways, moving averages don't matter very much. And the Bitcoin price has gone sideways on a short-term basis between 5,800 and 6,800, but it's also gone sideways on a short-term basis between February and April and the current price. And therefore, what happens is shorter-term moving averages all come together at about the same place in time. And that's why I always go back to the weekly to make my final decisions. And we know what the weekly looks like on a 2, 7, and a 30 time basis. We're about to get a cross between the 7 and the 30. So as I will talk about in just a minute, why I'm using stocks beginning with G, there's actually a very good reason for doing that, having to do with random look at things. I like to look at moving averages on a random basis too. I like to look at the same ones everybody else does, but I like to experiment. Someone suggested to Tone that 128 was working great with Bitcoin, and it really has. And that sort of comes out of nowhere. It's between the 50 and the 200, but that happens, and it happens with different asset classes. So my short answer is I have not looked at that particular formation that someone was just talking about, but I often look at many, many more than I talk about just to see how everything is lining up.
Tone, if this drop looks compressed compared to previous 2013, 2014, shouldn't you use different time frame candles?
No.
Ty?
You can always try to fit technical analysis into a current situation by moving things around. I found it's much better to stick with what you know, and sooner or later, the things that have always worked will come back into alignment. So I would agree with Tom.
And the thing is, like, it's not that different. Like, it's almost identical as it is. Like, trying to fudge with making 6-day candles instead of weekly candles, like it's so like relative. Like you should be able to, like, when you've looked at charts long enough, you should be able to like look at a daily chart and imagine what the weekly chart would look like from that.
Yeah, that's a good point. People beginning with technical analysis tend to experiment a lot more because it's difficult to visualize what's being said by the chart. But the longer you get into it, all you do is look at the chart and you can tell what it's saying. First of all, with the longer term trends, then the shorter term trends, then the little wiggles, and then how all of those long, intermediate, and short term wiggles affect or don't affect the overall picture. And generally, the shorter you get, the more irrelevant it is. And you start seeing that on a chart without having to experiment too much. But that comes with time.
All right, gentlemen, people want to hear traditional markets. Plus, Tone, we've been invited to go bowling with Dan. So obviously we need to, have some haste to be able to make it to Virginia Beach.
Yeah, I'm a little far from there at the moment, but I don't know. Maybe when can you start going bowling again, Leah?
I'm supposed to be able to walk by the end of the week.
Wow.
I know.
That's unreal.
I know.
That's
okay.
remarkable. Just don't fall down anymore. What we're going to do now, we've talked traditional markets yesterday, and Tone went over S&P. What I wanted to do, I started yesterday by showing 6 or 7 charts starting with the letter G. Let me just explain before I go back to that, what in the world that's all about. One of the things we tend to do is we tend to focus on indexes. And unless you really understand what goes into an index, you can get fooled in terms of what it's telling you. So what I've told everybody before is the first thing you do is you break an index up into its major sectors: consumer durables, utilities, financials, technology, energy. But then you break each of those up into smaller and smaller pieces. Each of the sectors can be broken down into industries, such as finance. Finance is a sector. It is in the S&P, the Dow, and the NASDAQ, and all of the BERA and all of the Russell indexes. But finance means a lot of different things. It means insurance. It means brokerage firms. It means large banks. It means regional banks, and on and on and on. And they don't always move together, even within their sector. So first of all is what the indexes are doing. Secondly is what is going on with the sectors. Thirdly is what is going on with the industries. But even at that level, every one of the industries, like regional banks, you will find some that are in bull markets and some that are in bear markets. It's great to look at all that stuff, but the easiest way for me is a shortcut that I learned 20 some years ago, which is look at random stocks. One way of getting random stocks is pick a letter. I picked the letter G, not for any particular reason, and we looked at General Electric, General Motors, Google. We're going to look at GBTC. We're going to look at General Dynamics. None of those stocks have anything to do with each other than they're all in the major indexes. So if you do that sort of letter by letter, just pick a letter. We're going to do R, and we're going to do S, and we're going to do another letter. Leah and I will do it later this week because I've already done it and I've seen what it says. And what that says is that these markets are moving up and down because of one or two sectors, not because of the broad market, number one. Number two is the sectors that are being propelled up and down are being done at the industry level. And when you look at those industries, you see wide dispersion of both up and down. We looked at General Electric yesterday. General Electric is one of the giant industrials. It was just taken out of the Dow and it's in a free fall. And we looked at that chart yesterday, and if you'll remember, it looks as if it could be bottoming out, regardless of what the stock market does, regardless of what the industrials do. And that's an important consideration. So I'm going to go to screen share. We're just gonna, yeah, go ahead.
Before you do that, a couple more questions because trading Bitcoin. So let me throw in the rest of the Bitcoin before your viewers get mad at you here, Tone. And then yes, a couple specific questions that people have on traditional markets. Oh, okay. Tyler started.
No, go ahead. Go ahead.
Okay.
I'm just going to put some stuff up.
Okay. So for Bitcoin, price moved out of the Bollinger Bands on the weekly chart at the all-time high. Shouldn't we expect price to also move out of the Bollinger Bands on the weekly at the final bottom?
It depends on which Bollinger Bands you're looking at. If you're looking at weekly Bollinger Bands, we have not yet broken down below the lower level, and we need to do that, and we should expect to do that when we are bottoming out. It could do it before. We could get a bounce. Let's just assume for a second that we drop from current levels of 6,350 all the way down to 4,800 in the next 3 weeks. I think there's a very good chance of that happening. But then what happens at that level? Number one, the Bollinger Bands, the RSI, the MACD will probably become oversold depending on the speed with which that happens. Also, you will have broken below the phase 2 line of Bitcoin, and I am betting that we will then return back above it, probably from 4,800 or 4,600 up to 5,300, maybe 5,600, maybe all the way back to 6,000 is possible. That will change all the momentum indicators. But to me, that's only the beginning of the process, because then we're going to drop back down to 5,000 and test it again and maybe again. So my short answer is you cannot be definitive of what a momentum indicator is going to do in the future, except for two things. If it is going to go to new highs like Bitcoin did, the Bollinger Bands will break above the top line and the RSI will become overbought and the MACDs will become overbought. When you break and go to new lows, all three of those things will be reversed. And so far they have not. And that is one clue that we are not at a bottom.
I can comment real quick. I'm not a Bollinger Band guy. You've never seen them on my charts. I don't normally care about Bollinger Bands. Now, can Bitcoin swing below the low Bollinger Band like it did on the upside? Yes, it's possible, but it's not very likely. I don't expect Bitcoin to swing below the lower Bollinger Band. What I expect is the Bollinger Bands to come together and kind of get stuck for a little bit at the lows, and then we can start to go back up. Like Bitcoin is a different animal. Like the way Bitcoin, I don't think Bollinger Bands are ideal for Bitcoin because it is way more likely to swing to the upside in these multi-year bull runs, and their bear markets are not that long. I wouldn't put too much on Bollinger Bands.
Well, let me just say one other thing about that, which is that Tone and I differ a little, not a little bit, maybe quite a bit about the significance of hyperwave. It's a new concept, and but it isn't for me. And so when I saw Bitcoin in this hyperwave, I began thinking of the 7 phases of hyperwave. And it did what it should do going to the upside. So far, it's done what it should do to the downside. I was hoping that phase 3 would hold. But through all of that, Bollinger Bands were one of the dozen or so things that I kept looking at to look at counter trends up and down as we hit various points. And I did not see anything different than I had seen with all the other asset classes that I've used Bollinger Bands with. So this will be a good test. Tone's last statement will be a very good test of, we all know that Bitcoin is unique as an asset class. I think Hyperwave is also a unique tool that when it happens to be occurring in a unique class like Bitcoin, it still is relevant. So I would love to see the Tone is right, meaning 4,975 is the final and ultimate bottom. That gives us a funky hyperwave, but I would prefer to see this play out the way all other hyperwaves have, including justifying what I've been saying about the RSI having to go deeply oversold below 30 and the MACDs going to much lower lows than we've seen in this downturn, and finally see the Bollinger lower band sharply broken before we get capitulation. So the test is easy, and it's all theoretical at this point. All of Tone's work is pointing to the exact same thing that all of my work has, except this one little piece about how unique is this asset class. Is it really, or is it the same as all other asset classes other than its volatility and its short length of time? I don't have an answer to that, but we will all soon be able to answer that. Okay, what you're looking at now is a G, and this G is General Dynamics. We looked at General Motors yesterday. We looked at General Electric. We looked at Google. We're going to come back to Google.
Oh, we didn't look at Google yet.
Oh, we did not? Okay, let's pull Google up. Here's Google.
And someone did ask about Amazon, by the way.
Yeah, but that doesn't start with a G. Okay, Google.
And with G-A-I-N, actually.
Yeah, right.
No, actually, someone did ask.
Okay, here's Google. This is 3 years. Take a look at the moving averages. We are in a bull market, and we have just gone to new highs. We have gone with Google the same as we've done with the NASDAQ, which is we dropped below the longer term moving averages, and I got very nervous. We had lower highs right here, and we had lower lows, and those lower lows were below all moving averages, and all the moving averages except for the longer one turned down. Tone accurately said with the NASDAQ that he wasn't worried because the long-term moving average was still moving up. And that is a key in determining trend, long-term trend, not short-term trend. So Google, as opposed to General Motors, General Electric, and General Dynamics, and the other Gs that we're going to look at, is a technology stock. It is in the NASDAQ. It is in the NASDAQ 100. It's an enormous company. It is a bellwether, but so are all the others we've been looking at. And the others are not doing what Google is doing. So this particular G is telling an important story about technology, the NASDAQ, and the whole tech revolution. And my thesis has been that that revolution is so powerful that it can pull a lot of weight behind it, which does not mean that just because these indexes are breaking to new highs, you can just throw a dart and you will be successful. You need to be very specific until this thing broadens out. So my read of Google is watch out. We're about ready for another very large move to the upside.
Yeah, this chart looks very, very good to me. It just had a brand new weekly close. Looks great. But earnings is coming this month, so you got to be careful. So, but other than that, it looks great. Tyler, I gotta say, I still don't understand the reason for a 2-week moving average. I just don't get it. I would be using 7, 30, and 50. I just don't see the significance of a 2-candle moving average. I still don't. That's another, people keep saying you and I always agree. We completely disagree on this. I see no reason to ever use a 2-period moving average.
Right. And the only reason I have a very short time frame is because of Consensio. Remember what I'm trying to do with Consensio, and that is in a market, an up market like this one, a bull market, if you wait for an intermediate term, a 7 or a 15 week moving average to move, you are going to be weeks too late at the beginning of a bear market. So I use a very short moving average to give me a warning of if price breaks through that short-term moving average, something has just changed. It's very short, but the next thing that's going to happen is the price is then going to drop towards the intermediate term. The only way you will know that is by following that very short-term moving average. You want it to lead the price down to the intermediate level. Once you've gone below the intermediate level, like this one did, and all the NASDAQ and the NASDAQ 100 and the Dow and the S&P, in each case, I was able to tell weeks before it occurred because of that short-term canary in the coal mine. Most of the time, when the short term, which you can barely see here, turns down, like right here, we cut through price, then we cut through the intermediate term, and guess what happened? The intermediate term then turned down and came very close to crossing the longer term. So you could have, if you were a trader, a short-term trader, as opposed to a long-term investor, you would have had a number of signals. Well, I'm a long-term investor. So what I start doing in a fully invested position is start trimming when the short-term moving average cuts below the intermediate term in increments, not big trades, but taking 10% off, 20% off, and then I accelerate that. And the only reason I do that is because in the 3 biggest drops of the last 30 years, which turned out to be 3 of the biggest drops in the history of the stock market, it allowed me in each case to be almost entirely defensive before price turned down more than 10%. And the best example of that is 2007, 8, and 9, where I was able to be fully hedged before we were down 8%, and all of the clients that we were dealing with in equity accounts that were normally 100% invested, no one lost more than 8%, whereas the indexes were down between 50 and 80. Now, someone would say, yeah, but it becomes obvious after a while that it's falling. The problem is when you start a free fall in a bear market, including Bitcoin, when you start in that free fall, you freeze. You don't act. You wait. You look for a place that you can do something. You wait for a rebound that you are going to then get out of. And the market will never give you that chance. You're going to end up riding it all the way down. And in each of the 3 cases, 1987, 2000 through 2003, and 2007 through March of 2009, each of those 3 cases, we got lucky because they didn't keep going down and nothing worse happened. But in the last 2, 2000 through 3 and 2007 through March of 2009, extraordinary macro policies were put in place around the world to keep us together. I'm not going to play with a client's money with that much on the line. It's better to take a 2 or a 3 or a 4 week canary and let it start the process of you thinking about getting defensive. It's very easy to get back up to the long side when the short term begins moving up again and gets back through the others. So that's the only reason I use it. I'm probably the only one in the world that will do that. So Tone's not along. He's not alone looking at this as pretty peculiar. It is. It's very peculiar, but for me, it works.
I was on mute. All right, Ty, it looks like you have GBTC up. People have definitely been asking about GBTC and what's going on there.
Well, let's take a look at this one first. We started looking at this. This is General Dynamics. So this is not an industrial. It's not a transport like General Motors. It's not a tech like Google. And something peculiar is happening with all the talk about war, with all the talk about North Korea and all of the rest. This is in a sharp downtrend in which even the longer term moving average is turned down. And the price is below the intermediate term, which is falling very, very quickly. So I bring this up because this is in defense, this is in aerospace, and you would not expect this if you were just looking at the Dow, the S&P, and the NASDAQ. So what I would be doing if I owned this is I would look at Raytheon and I would look at Boeing and I would look at other things in the industry and see if there's confluence between what's going on. And that's what I mean by sector rotation. Doesn't matter what the big indexes are doing unless the only thing you're doing is playing the big indexes. If you are actually owning stocks or individual sectors or industries, you need to take it one step further. And I think this is a good tool that everybody can use just by picking a letter and going through and pick out 10 random names and see what it tells you about the overall picture. Okay, so that is General Dynamics. This one is, we looked at it before. This is General Motors. We looked at a long-term chart and it had gone out of business. It was saved by the government. It was saved by the unions. It was saved by the company. It was saved by the US Treasury. And now it's in a decent uptrend, but it's important because it's part of the transports. And there are very important technical tools that Charles Dow gave us called Dow theory. Now, this one is not looking particularly good. It's still flat. It's not going up with the Dow. It's not going up with the S&P. It tried, but then it triple topped. And as Tone mentioned yesterday, that triple top turned it down. And all of a sudden, we find it cutting back down through the long-term moving average that didn't have enough emphasis to the upside to stop its decline. So to me, another interesting concept, just something to look at. And then I'm going to add the one that I told you I would, which is GBTC. Now, first of all, on GBTC, it looks almost like the Bitcoin chart. It should. However, it isn't for a number of reasons. There's some funny things with this chart because of the way it's calculated, going to very large premiums over the inherent value of the Bitcoin that the trust owns. And also, as the market weakens, for the premium to try to catch up with the price and sometimes lead the price. But just because this is another GBTC, I thought I'd throw it in here because what it is saying is the same thing that the crypto market is saying to me. And the same thing Bitcoin is saying to me. The long-term moving average just turned down. It's beginning to drop very sharply, as it will continue to do. And now we've got a fundamental piece of information that could kill this, at least kill the premium, which has ranged between about 38% recently and about 55%, it could drop it to zero overnight. Now, dropping the premium to zero from this level means that this is going to drop from $9 down to about $4. And it could happen over a weekend or on a Monday morning. Now, why would that occur? Because the new ETF, depending on, and it doesn't have to actually come out. Tone was right. When we get closer to that August date where a comment is going to be made, we're going to have to watch the premium in GBTC very closely. If they come out and say, no, it's too early for us to do any other new security having anything to do with Bitcoin, then this is going to continue the way it has, in my opinion. If they say we are probably going to seriously consider this new ETF, I think you're going to see a 20 to 40% drop in the value of GBTC, because the new ETF probably will not be trading. It will be in the form of an actual security that trades at the intrinsic value of the holdings of their assets. And we don't have time to go into the details, but the Bitcoin Investment Trust is more like a closed-end fund. And just pick up a Barron's or a Wall Street Journal, turn to the page that says closed-end funds. There are hundreds of them. There are thousands of them. And they will tell you what the premium or the discount is on each of those closed-end funds. I will just tell you that I have seen premiums and discounts on widely traded closed-end funds by institutional investors go as high as 80% premiums and as low as 60% discounts. So this is not a strange security. This is a commonly used security, but it's the only way of trading Bitcoin if you're not going to actually trade the Bitcoin itself. If something comes along that is more efficient, that can be hedged with options or futures, which this cannot be. GBTC cannot efficiently be hedged because of that premium and the discount. I will play it with hedges, with options and futures personally, and maybe in some of my accounts, but not if the possibility of another security coming along that will kill the premium on this. Now, will GBTC go away if its premium drops to zero? No way. It will simply get more and more efficient in terms of you will know exactly what the holdings are if it's going to compete with any other ETF. So that's why I wanted to talk about that one. And with that, I'm done with my G's for today.
I have a question for you guys. So both of you have said that. Oh man, Tone, you're not giving me a heads up on this one. Actually, you know what?
Oh, that wasn't me. That was Tyler.
No, I did that.
Tyler went on screen share. All right, well, I'll just keep my glasses
I can get back if you want me to, but
no.
people want to look at.
I look like a librarian. I'm good. Ready?
My Twitter is blowing up. Apparently, Token Pay is threatening to sue me.
Really?
Yeah.
Oh, fantastic.
I think that's great.
I mean, I think it's going to end up really great. And not
they're gonna have to go to court and prove how they're the most secure cryptocurrency in the world, more secure than Bitcoin.
Okay, somebody quickly on Twitter or on YouTube start a defense fund for Tone Vase. It's in the best interest of the crypto world, and it's in the best interest of Bitcoin.
Tone, you can't spend it on the Hornitos.
Mm-hmm.
All right. All right. When you're fine, Tyler, you take this one first while Tone is dealing with his lawsuit. So both of you guys have said that you're bullish on S&P 500. So it's really a question for both of you guys, but please start, and I'm going to read it directly. Can you talk comparatively between the S&P 500 and the NASDAQ 100? Sometimes we talk about this, Ty. Which are you more bullish on and why? Which is the better two to get in on? And I'll start with you, Ty.
Well, the cheapest one to get in on is the S&P 500 because it has not kept up with the NASDAQ. The NASDAQ is moving ahead of the S&P 500, but most of the big drivers in the NASDAQ are in the S&P 500 also. It's just that there's another 480 stocks that are not tech related, whereas in the NASDAQ, a very large number are in the strongest industry, which is the NASDAQ. So if you are the kind of investor that wants to buy something that has lagged because it will catch up, then I would say the S&P 500, and lower than that, the Dow. The Dow is the weakest, and it could turn out to be the one that does the catching up. Right now, it's all NASDAQ. It's all NASDAQ 100. It's all the FANG stocks, and it's the Googles and the Amazons and the ones that we've been talking about before. That's where the relative strength is.
Don, you just got $100 tip. Go
Whoa.
get him.
Thank you, Sammy. Did he ask a question?
I said go get him.
All right.
That was one of the bigger smiles I've seen Tone have. Good job, Sammy.
He started the defense fund.
Yeah.
Yes, you're number one. Do you want me to re-ask your question, or should I keep asking Tyler a couple more questions?
No. Go for it. What do you got for me?
All right. Just simply put, what would you go into more? The S&P 500, NASDAQ 100? What are you more bullish on?
I mean, I've been more bullish on the NASDAQ, but it's earnings season for the NASDAQ. Play it safe during earnings season. Stick to the S&P. When earnings season blows over, go back into the NASDAQ. Like at least wait. Netflix is reporting on Tuesday. Amazon, Google, Apple, Facebook, they're all reporting this month. Just wait for that to blow over.
Drinking more and more Hornitos. Okay. All right, gentlemen, let's jump in. A lot of people, actually, you really don't have to so much because I think you guys have been following it, but a lot of people want you to talk again about the yield curve inversion.
There isn't one.
Talk about yields then, if there isn't one.
Sure, we'll take a look at yields. Okay, real quick though, someone asked me to take a look at a 9-day chart. I don't know why. Guys, stop picking out obscure days. It doesn't help. If you find a pattern, I don't even know how to make a 9-day chart. If you find a pattern that works, just trade it and keep your mouth shut. It's the best thing you can probably do. I mean, yeah, you caught the top nicely with a 9-day chart, 9-day candle. I mean, it worked well here as well. The moving average crossover wasn't as clean. The moving average crossover wasn't as clean. So some things are better, some things aren't. You missed this top with a 9-day chart. Like, if you see something really good there, just trade it. I'd stick to the normal stuff. I think someone asked about Monero. I can look at Monero real quick before we go on to the yields.
And the larger question on Monero was that, so, okay, pretty much Bitcoin and Monero looks done on the 1 hour, 4 hour day, and 3-day, but looks ready to turn up on the weekly. Is this a case of the longer time frame likely being dominant? Do you think the double question
is? The longer time frame is always more dominant. I'm not going to look at anything sub 1 day. I'm only going to take a look at daily and weekly. This is the daily. This is the daily as well. And this is the weekly. Let's look at the weekly. Monero is like holding up fairly well against Bitcoin. It's doing fine. I don't really see anything here. The weekly chart of Monero. I was expecting it to bounce off the top of the triangle, but when it didn't, that didn't work out very well. We're off a 9, you know, and I think we're getting ready for the countdown phase. So I think Monero is in serious trouble. I mean, Monero is becoming completely useless. What the hell is that? All right. Monero is becoming totally useless. Bitcoin is going to have way more privacy than Monero ever did in the near future, within like 6 to 12 months. And speculators and traders that know what they're doing, they know this. And Monero is going to get beaten down way before that privacy actually enters through a soft fork into Bitcoin or on a Lightning channel. Here is the 1 day versus the dollar. I'm actually going to go to the weekly version. I want to see what kind of triangle it has. Yeah, you see this triangle it's not even as clean of a triangle, but you also see how on Monero, just like with Litecoin, it's a much cleaner triangle. It's just cleaner, that's all. Just a cleaner triangle. And we broke down, and there it is, right? Let me add a...
Yeah, can you put the count on that?
Mm-hmm.
That would be interesting.
It's going to be a 9 candle. All of them are. It's taking its time calculating. There it is. Yeah, it's a 9 candle. More or less, right? And it's already starting to go down. Like Bitcoin is the strongest one. Bitcoin made it to the top of its triangle. It backtested fully. None of these other coins did in dollar terms. So Bitcoin is still by far your strongest crypto, even relatively speaking. There's not much in Monero, guys. Fundamentally, Monero is nothing. Now, when I say fundamentally Monero is nothing, it is fundamentally better than every single crypto out there, even better than Litecoin, because they actually have different tech, different devs, right? So when I say fundamentally Monero is no good, it is better than any other coin out there. Like everything else is like complete garbage, especially if it's a proof of stake coin. Like they're just garbage. They're absolutely nothing. They're one guy printing money for himself. Yeah, Monero is your next best piece of coding, and it's like maybe has a 0.002% chance of finding some kind of a use in the rest of our lifetime.
Tyler, what do you think about Monero?
Well, I was going to ask Tone. I'm interested. I don't think we've talked about this before, but since the SEC basically said they're giving a pass to Ethereum, and they've already said that don't worry about Bitcoin, it's fine in terms of regulation. If they were to expand their definition that allowed them to put Ethereum in there, what 4 or 5 coins or tokens or cryptos do you think that they might attempt to include? Monero is definitely one of them.
Yeah, Monero is one of them. Litecoin is another. That's about it. I mean, there's other small coins out there that are actually decentralized. Well, they're not really decentralized, but at least they were created fairly. Like I would even put Max Coin in that boat. I don't want to name any others. There's a couple of them in there, but they're not big enough, right? Like the only reason why they're addressing Ethereum and they're addressing Bitcoin is because their market caps are so high. Like they're not going to address any, including Monero, until its market cap is big enough and sustained at a big enough level to warrant a statement. But here's the problem, right? If the SEC believes that Ethereum is decentralized, then anything can be it. Like I don't know. Like it's such a technological misunderstanding of Ethereum. If the SEC thinks that Ethereum is decentralized, for all I know, 4 months ago, they could have said the same thing about BitConnect or OneCoin. Like it is that much of a gross error in the part of the SEC to consider Ethereum being decentralized. Like it's hard to compare. Well, like I don't know. Well, like I don't think I've ever seen another. I mean, again, like government agencies are generally incompetent, but like I can't even like they are so out of their realm. Like I don't even have an analogy for this. Like it's just like blatantly wrong on the part of the SEC to call Ethereum decentralized. Like talk to an actual blockchain expert. There's only 20 of them. I know they're hard to find, but it's just such a misunderstanding of the blockchain technology to consider Ethereum decentralized that I don't expect anything like normal, right? Like all it is whoever pays the advisors to go into the SEC, right? Like they can say the same thing about Ripple. They can say Ripple is decentralized. They can say I don't know anything. Like it's hard. Like I don't know. Like I'm at a loss for words because it's such a gross misunderstanding of what a blockchain is.
Thanks.
Well, gentlemen, you don't actually have. Well, no, you didn't talk treasuries for the most part.
Treasury. Let me pull that up.
Yeah, we did say, Leah, I can't remember when it was, but Tone and I talked about the inverted yield curve. And there's discussion that historically you're talking about the very long, the 20-year, the 30-year coming down. But now it's switched where people are looking at the real short-term stuff. They're looking at the 2 versus the 5, the 1 versus the 2, the 5 versus the 10. And it's possible that you will get some inversions or close to it. As this chart shows, there's 3 points at which you had little inversions with a couple of them, and they didn't last very long. So any discussion of the historical importance of inverted yield curves being predictive of recessions or a slowdown in the economy, you've got to be very specific at what data you're looking at.
Yep. I enjoyed hosting for you guys that day, which I think is great that you brought up the Fed there, Tone. Let's see what you guys think today.
Yeah, so I mean, here are your yield curves. So 2, 5, 10, and 30. And as you can see, there's no inversion. The 2-year is 260, a 5-year 275, 10-year 285, and 30-year 295, right? So they're at its proper level. Now, over here, this is like this. I don't know. This looks weird. Like my scale is weird. Like I don't really like if I put it here, right? Like this might look inverted, but if I look at the numbers, right? If you look along the left side, look at the close. So the 2-year is 227, the 5-year 265, the 10-year is 290, and the 30-year is 316. Like no matter where I mean, like maybe there was one day where the yield curve actually like flipped between two of these things, but like this one is in line as well. Like a yield curve inversion needs to last for months, if not 6 months, in order to consider it to be foreshadowing of the future. And we have not had that.
Yep, I would agree completely.
Here's a look at just the 10-year curve. And this is the 1 month 10-year treasury. We topped on a 9. We are on a little bit of a pullback. And then we're probably going to go higher. Like it's time for yields to go up. It's time for yields to go up. You know, like a 40-year market, 40-year bull market can't last forever in bonds.
Tone, you got a tip unless, Tyler, were you about to respond? Uh-oh, muted.
Now, look at this, right? So you have a double top here.
Oh, we can hear you now, Tyler, I think.
Okay.
Yep.
You also have a double bottom there. So you have a double top and a double bottom. One of these has to break, right? It'll probably be the double top. We might pull back a little bit, and then we're going to break to the upside. Like I think the double top's going to break. This double bottom, you know, was separated by about 4 years. That's a long enough time to have for a double bottom of a separation, right? And I think we're going to pull back a little bit, maybe to 250 on the 10-year, and then go up from there. And then once the bonds break 3% and start going to the upside, it's going to get really weird because a lot of these fixed income, you know, funds, they're going to have to exit their positions because they're going to start losing a lot of money. A lot of these pension funds are going to be in a lot of trouble when yields start going up. Their bond positions are going to be like bleeding money in their portfolios, and they're going to have to sell. And when they sell, they're basically going to be exiting these bonds, hence raising the interest rate more to entice people to buy new bonds. And it's going to be a problem. And I think that will cause the stock market to go up because that money has to go somewhere.
Okay.
I would agree, except I think it's the other way around, meaning we're now getting more and more bullish on the stock market. Tone has been bullish throughout this whole period. I've been less bullish, but we're both in sync that all the technicals are lining up for a good move. The profitability of corporations have been getting stronger and stronger, even with all the noise about trade. The unemployment rate is falling to lows that people expected could never happen. Everything could well be lining up for the stock market to take off. If it does, and breaks out of this pattern it's been in for 6 months to the upside, you will definitely see these yields break through to the upside of that blue line. If the stock market runs into problems over the next 3 months or can't get going, or earnings start coming in poorly for the NASDAQ kind of stocks, then you could easily see the Federal Reserve, and they've already talked about it, beginning to step back from their plan to continue upping the yields on the short-term basis. There are some signs that the amount of credit that Tone just talked about and the spreads on the junk part of that has gotten into a very dangerous territory. And when that happens, things can quickly unravel, beginning with pension fund asset allocation. They have actuarial assumptions they must hit, and they have not been hitting them except for the equity portion of what they're doing, which means that the bond portion, which they have not been able to make any money on for years, is minimal. But minimal, when you talk about all pension funds, is still trillions of dollars. And if they have to exit bond positions driving yields higher, that can snowball very, very quickly. So the group that is sitting on the hot seat are not the investors, not the pension funds, not the central banks around the world, but it's the central bank in the United States. They are walking a tightrope, and they know it. They've said it. And we are so close to the zero line that it becomes very difficult for them to be able to cut rates very far if things get out of hand. So that's why all the talk in the media and the talk by politicians and the Treasury Secretary and Powell are focused on this very incremental test every 9 weeks or so about should we or shouldn't we push the balloon a little bit further with the pin. And so far they've done it well, and they've allowed this bubble in the stock market to take place, which has allowed bubbles in the stock market and all the other markets to take place, and has reignited the bubbles in the real estate market all over the world. But the problem has not gone away. And it all gets down to this simple thing of credits and yields.
Thanks, Ty. Tone, you got a tip before. You say news doesn't reverse a bear market, but could you see an ETF approval reversing this market?
No. We didn't get to talk about this. Maybe we should save it for another video. News does not reverse a bull market. Yeah, I'm sorry. News does not reverse. Well, news doesn't reverse a bull market either. News will not reverse a bear market. The ETF news will not reverse the market. I don't know. I mean, it's very good news. It's very positive news. I don't have a reason to justify my statement. It's just that not once in my life had I ever seen news reverse a market, unless it's a buyout news, right? Like unless someone's going to buy out Bitcoin, the news is not going to reverse the market. It has to be like buyout news or merger news, and that's not going to happen. So news in the traditional finance world is not going to reverse the bear market. Now, when people started hyping up Bitcoin because the Wall Street was going to add futures, we were already in a bull market, and people hyping up Bitcoin for all these futures helped drive Bitcoin to 20,000 on speculation. But what was the reality? The reality was these futures don't really do anything other than make Bitcoin look more legit, and just in general, from a fundamental perspective. So it helps long term, but short term, Bitcoin got driven from $7,000 all the way to $20,000 on, unwarranted speculation that somehow futures were going to change the world, but they're not, which is why we're back down into the $6,000 range. Now, is it good for the Bitcoin price long term that there is an ETF? Absolutely. I will probably be trading it in my retirement fund because I just don't like GBTC. I will certainly be trading the Bitcoin ETF in my retirement fund if there is a Bitcoin ETF. However, I mean, if Bitcoin will go up on the hype of the ETF if it gets approved, which I don't believe that it will, but even if it is, it'll definitely go up for like a month or two, and then the bear market will set in again, and people are just going to blame, people on Wall Street for driving down the price of Bitcoin and somehow profiting from the ETF. Like, people will always come up with their conspiracy theories. This will not reverse the bear market.
Definitely a good conversation for a broader conversation. Mm-hmm. Good topic for a broader conversation, I mean to say. But Tyler, do you want to say quick comments?
No, this is one of those subjects that Tone and I are exactly in agreement on. The longer you look at history, the more obvious that is. You buy the rumor, you sell the news.
And no one's buying the rumor, right? Like, look, the Bitcoin price is not going up. Like, right. Like if people were everyone knows August 10th is a big day. That's less than 30 days away. And no one is buying the rumor yet. Like, yeah, so we're up $200, whoopee, right? Like, until I see Bitcoin trading up in the $8,000 range, I'm not even going to consider this buying the rumor.
Tyler, at what price break do you think that Bitcoin is in trouble of collapsing all the way down to zero?
Well, to zero, I don't think that will ever happen. Below 1,000, it's easy for me. A close below, it now looks like it's just about 5,200. The phase 2 line's been moving up at $82 per week. And since we've gone sideways for so long, that line keeps getting higher. But a weekly close below the phase 2 line, there is no support down until you hit 1,000. And I believe that's what would trigger that. The more existential question that people are worried about is purely fundamental, having to do with mining costs. And my view on that is very simple. I don't believe anyone knows what mining costs are except the miners. And it is not in their best interest to let anybody know what they are. I think the average of $6,000, by looking at all of the nations of the world and dividing by the number of nations that have mining costs, is silly. That has nothing to do with the fact that most of the mining is done by 4 conglomerates, and they have very similar cost structures. And I've heard everything from 2,000 to 1,000 and even down to $500. They're fine. Competition disappears, and now they're ready to do what they need to do. So to me, the existential question of, is it possible for Bitcoin to go out of business and drop to zero, is approaching zero, the possibility of that happening. The possibility of it dropping down to 1,000, I think, is a very large number. And I give it about a 3 out of 4 or 75% chance that that's what we're going to see. But in no way does that make me any less of a massive bull in terms of what's going to happen over the next 10 years with Bitcoin. It's just, from what level does it happen?
Good. Nice little optimistic note. I think the three of us do think that that's going to happen. Tone, optimistic note, is it going to moon, and when?
I don't know. It's going to moon when the bear market ends, and I just don't see an end to the bear market yet. Like, when we have technical signs, technical analysis will tell us when the bear market is ending, and it's not ending yet. So once we get those signs from TA, hey, look, it'll moon. Like, eventually people will give up on all of these shit coins, and they'll turn them all into Bitcoin. Like, it's going to end sooner or later, right? Like, I find it, like, funny. And since I was talking about Monero earlier, And like, I give Monero, like I said, like almost a 0% chance of long-term usefulness. And all you guys, by believing in Monero, all you guys are doing is making Fluffy Pony richer. Now, I like Fluffy Pony. He's a good friend of mine. But hey, when you buy a coin where you know he is the face of and been in it from the beginning, then don't complain that he's wearing an $800,000 watch. I recently saw those tweets. People realized at Consensus he was wearing an $800,000 watch. Hey, don't complain that a CEO of a company, or as CEO, as close of a CEO as you can get to a cryptocurrency, is Fluffy and formerly Charlie and Vitalik Buterin. They're like CEOs. It's like complaining that, what's his name? Bezos of Amazon is wearing an $800,000 watch. Hey, he built this company and he gets to be rich of it, right? That's what all of these other projects are. Don't complain. You're enriching them by buying into their scam. So there you go. And Monero is not even a scam. It's actually, it was somewhat honestly created with just a few question marks in the beginning. And and they're not proof of stake, so they're not printing it for themselves. But still, like, hey, don't complain the other guy is rich when you are scamming strangers and feeding the creator of this token, whether it's anything, whether it's Digibyte, whether it's Token Pay, whether it's any of them, right? You're basically making the founder richer. It's the only reason why these things exist. Oh, we lost Leah. Or did I lose you guys?
No, no, you're good. My internet's not that good today. Well, on that, what do you think? We let everybody have a Sunday?
Yeah, I think we lost Tyler's mic, but hey guys, thanks so much for sticking around with us. And morning brief tomorrow?
Morning brief tomorrow.
All right.
All right. Bye, everybody.
Thanks, guys. Oh, I forgot to show my affiliate codes, but that's okay. You guys know what to do. Later.
Bye.